Hello everybody, this is Bulldozer Investing. Today is March 26th. It is 4:22 p.m. It's Friday. So I decided to move the daily videos to weekly videos. Now it's going to be on every Friday due to my personal schedule. I was continuing on remodeling the basement. However, um, I had to stop it. Basically, all the budget that I had for the basement, I had to average down whatever I had on the loss side. So I stopped the basement construction, unfortunately, but my nighttime classes for teaching cybersecurity from online, training students. There are about 100 students in the class, so it takes a lot of time and effort. 7 p.m. to 10 p.m. classes, 3 hours a day teaching is taking a lot of effort. So I'll just move it to every Friday, just to be fair, and I don't want other people to be disconnected from the market. Having said that, we'll go ahead and show you our Twitter page because this is a common question I get on the YouTube videos. So I'll go ahead and pull that out here. My Twitter handle is bulldozer_IMVST. Sometimes during the day I will go ahead and post charts to keep you guys updated even though the videos aren't there. So you can follow me on Twitter and keep, stay connected with the market and get updated with the charts. Let's go ahead and go over our first stock. Well, when I say stock, I meant VIX. So VIX is not really a stock, but it's a volatility index. So even though I thought that VIX was going to move up a little, things have changed. It actually did play technically yesterday. Basically, I was guessing that it hit the 100% and go even more above, but it hit the 100% extension and maybe to what is this, the 50-day moving average, and then got rejected. And then moreover, for the market being bullish, is that it broke down the 9-day moving average as well. It looks like it wants to test this 161.8 extension, which is the 1793. Um, I could say that the markets have shifted its move right after the news when we saw that Biden has invited President of Russia, Mr. Putin, and President of China. So that actually did warm the market a little bit, and it caused the downturn of all the Asian stocks, and it kept the stocks moving up. All the Asian, like especially Baidu, and it reversed big time to a positive. It was like -10 at one point. So I guess Biden is learning from Trump how to play around and manipulate the markets to the upside. That news really, really, really affected the indexes. QQQ went from negative to positive. So it was a big shift during the day. And I told you guys that, and I mean, I tried to read all the comments, but I did say that politics will play a big role on where the market will go. And of course, the politics will match where the technicals are supposed to touch and then downturn, like exactly like this, like the VIX hitting, the VIX hitting the 50-day moving average and then just going back down. So that was expected. Other than that, I believe VIX is going to move down. And as far as the markets go, Biden did again start his presidency with bombing Syria, and then he went off, um, continuing the tension with China and Russia, which didn't play well for the market and the tanker or whatever the ship, the cargo ship being stuck at the canal, affected the energy sector in a positive way because all the oil tankers have couldn't move, so that basically increased the energy sector and the oil prices. I don't know if it's a manipulation. I don't know if it was planned or an accident, but it just smells fishy. I don't know. It just doesn't fit right. How did that get stuck there? I don't know. I didn't read the news, but overall, the climate change summit or whatever they want to call it. After the oil prices being up and all the clean energy stocks getting destroyed, it wasn't to my surprise. So it was well planned for the market and the algos to kick back up because you hear the clean energy, you hear Biden, Russia, and China. When the algos see that, bam, you see the huge, huge, huge reverse on the market. So that being said, we'll go ahead and move on to our next ETF, basically. So we'll go ahead and analyze SPY and see what happened. And I told you guys last video that SPY, by any means, it does not look bearish. And I kept saying that. The index alone, now I'm not talking about individual stocks, the index alone, huge reversal again, bounce off the cloud. I did tweet that you have the 3 bounces off the cloud top that is bullish, and it was a signal for reversal. I can pull that up as well. I don't like to bring evidence and say, oh, I told you so, but just to have you guys know that how important these real life tweets are. Here you guys said third cloud top bounce. This is very important, indicating a reversal. Now, when did I say that? Right there. When the bounce happened and we were still in this wedge, it kind of looked like a double bottom, and it was looking like a descending wedge. So it was obviously a bullish reversal right there, especially carrying over the 50-day moving average. So I do post these comments on Twitter, so it would be very informing for people that aren't able to read the charts. That would be a big sign. This is a huge river. I mean, honestly, I think SPY is going to hit. My plan was 411, but the thing is, SPY is so off of, like, we're almost like more than 1.5% right now. But how much did it affect this individual stocks? Usually, when you have an ETF, SPY going up this much, you'll have Apple and all these. I mean, Apple might be more the QQQ, but either way, all these stocks would finish like 4%, 3%, 5%, right? It doesn't, it's so disconnected. But this right here is a huge bullish reversal. I think we're just going to test 397.78 sometime next week, maybe do a little flag and get a support around 393, and then eventually head up to 411. Now when we get there, then we'll reevaluate things. But SPY, on what I'm seeing, and I've been seeing a bullish trend right here. Ignore the daily noise, ignore the volatility. Nice green volume bars. MACD, stochastics, I'm sorry, is on a verge of crossing. Let's take a look at, I think there you go. MACD is on a verge of crossing again. RSI is beautiful. So the indicators are telling us, yeah, it's a good reversal. However, SPY being so disconnected from the market, I don't know your individual stocks will benefit from it. So we'll go ahead and see that for next week. Next up is QQQ. So let's take a look at NASDAQ and let's see what's going on. NASDAQ, on the other hand, isn't as bullish as SPY. However, I do like one formation that I see, and I've told you guys that last video, was the inverse head and shoulder. I'll go ahead and take a picture and do a little drawing for you guys to be able to see what formation I'm talking about. So right here, okay, so if we reverse, but the thing here is that the 50% and the 61.8 extension towards the downside need to the upside, I'm sorry, need to be broken above, basically where this cloud region is. I won't be bullish on NASDAQ until we really clear out the cloud. Now, cloud indicator usually is a little late, so if you want to be playing it early, that's one thing. But look at this channel right here, right? This is rejection, support, was a support right here, and then bam. Now I don't know if this is going to play as a rejection right here, this channel that we drew. I don't know where it's coming from because I'm so zoomed in right now, so you can't really tell where it's coming from. However, these two levels are going to be your main rejection points. See this rejection off of the 50, rejection off of the 50. This is the purple line is the 50-day moving average, and the 50% Fibonacci has been being rejected a couple times here, and then the 61.8 also getting rejected. So these two levels right here are technical points. So we want to clear out the 50% extension, we want to clear out the 50-day moving average, and then eventually your third resistance is going to be 61.8. So let's take a look at those numbers and see where they are. 9-day moving average, we close right on top, right on it. Your next resistance is going to be 318.39. Your second resistance is going to be about 321, where the 50-day moving average is. Strong indicator of resistance for the last couple days. And then your final resistance is going to be 323. If we break above that, then you're going to see all-time highs. What I'm thinking is that you could play this two ways. Okay, one, it could be, let's go ahead and redraw, and I can tell you the bullish and the bearish scenario here. One can indicate that this was a, you know, a bearish flag, and it broke down, and it's eventually going to see this region. Or one can, the inverse head and shoulder that I just showed you in the previous drawing, that's a bullish one. Or you could eventually, and this is too far out, but you could eventually play something like this: W, flag, and then go up. So this is called the dragon formation. Basically, it would be a double bottom here. I like the second bottom to be higher than the first one, so the higher lows, and then eventually run off, flag, and then run higher. We'll see though, because this could be a broken bear flag right here. We don't know. Or it could be possibly heading up for that W and then flagging. So I can't really, I'm in the middle for QQQ. I don't really know what to say. Your IBMs, Intels, your dinosaurs of technology, HP, they're doing fine, actually. But the high growth techs are kind of pulling the leg for QQQ, but a huge bar today. I mean, you look at these bars, it's just so volatile. Like if you look at the day on the 15-minute, it was ridiculous. That was ridiculous. And this is the Biden news. This is the Biden news right here. It came around like, 2:30, whatever, when the news was, bam. Okay. So you get this down day, you're at 308, coming up, double top, again, bearish move. And then right when it was about to break out, that's when they triggered the news, and Bloomberg and all the terminals grab it way before you, and milliseconds really matter, and then bam, 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 bam. Look at these buying volumes. So I've told you guys, it's totally a climate. Before it was news related. When Trump's presidency, now then it was technical related, and it was just like buy anything you want, and it just going up. The high growth names, the specs, and then it was after the inauguration, Biden wouldn't come out of his cave, and then the stocks went up, and everybody was kind of freaked out about what's going on, and then finally, I don't know if it was advised to him to not play against China and Russia at this moment because of economic downturns and so forth. So Fed did everything that they could to pump the market. That's not a problem. But the presidential, the chief, the head of chief of the country needed to do something, and needed to trigger the algos to kick in that buy signals, which it happened today. Perfect timing. They know exactly when they're taking all those stop losses and margin call sells, and then they took all of that, they fattened up their belly, they bought it, and then bam. Yeah, look at this. So possible flag and a retest of 318.39 does completely make sense. And look at where these channels are playing out. Completely technical the market is. It's just that the issue is that the government has to, I mean, it will look like a socialist, like, don't think I'm a socialist or communist or anything. Not that, there's nothing wrong with being socialist. It's just that right now, how the markets behave is just totally news driven. And this past 2-3 months that we're waiting for news, but it was more of like global attention. And I kept telling that in my last video that market, I think, was kind of creeped out about the Syria bombing, and what was going to happen, or were we going to start another Arab Spring, North Africa, Middle East tensions, and then Russia is going to kick in, China is going to kick in. China has bunch of businesses in Africa now. I think there's about like 3 million people, Chinese descendants in China, in Africa working, if the news weren't fake from what I've read. So they're big players down there, and the Middle East is boiling up. These are all global attentions. Again, a simple, cargo ship getting stuck and, clogging up that Suez Canal completely triggered all the oil sector to move up. So it's all global news, guys. And a lot of people are arguing about, valuation wins over time, but how much time do you have is the real question. And right now, if you're looking at the 3 to 6 months ahead of you, I think it's all going to be global news ahead of you. Okay, so that's QQQ. Next up is Dow, and I've told you this. Dow is going to benefit from anything. Rather we have a war, rather we don't have a war. It's the news is going to be reopening. Dow is going to go up. News is going to be war. Dow is going to go up because you have all your companies in Dow that would benefit from war anyway. So look at this huge breakout, completely technical. Got a support at 9-day moving average. This 100% extension was a resistance, and it just gapped up. It would be okay if it retests 9-day, it's fine, but I think we're moving to 340, 343 on Dow in the long term. Give it a couple months, it'll be there. It just looks bullish. It looks completely bullish. There's no doubt about it. I think Dow is going to be the most benefited. Rather, doesn't matter what the scenario is. I don't see too much downside on Dow in either case. So playing the Dow stocks would be rebalancing your portfolio to Dow stocks would be a smart decision. Now we have the Russell, so let's go ahead and take a look at Russell. Russell complete, and I told you guys this again, Russell could bounce off of the cloud bottom or this extension. Again, a beautiful, 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 right on the cent, right on the money, technical play right here. And you guys know I haven't drawn these, just now. It's been recorded on my videos, and these lines have been there forever. So as you can see, I've indicated that from the last video that we might test the low of the last couple of weeks, which we have, and bam. Now it's going to have a cloud top resistance, the 50-day moving average, right on top of the cloud and right on top of the closing price. So then you also have all these moving average resistance right there, bearish crossover on the 9 and 20. So we'll see how Russell reacts to it, but a complete beautiful double bottom here. Strong buy yesterday. Not as much as volume as yesterday, but again, your internals are about to reverse, so we'll see how that plays. I think 228, 231 on the shorter term side, and the longer term 257 for Russell. Out of all, Dow and SPY looks more bullish, QQQ and IWM, which got hit the most. So if you look at, IWM, you're looking at February prices, January prices right here, right? So it looks like nothing really had happened, but if you had IWM or QQQ stocks, most of the high growth QQQ stocks and the Russell, you're pretty much hit 50%. So any name you look at, they're about 50% discount, but then you look at the ETF, it's really staying the same. So the ETFs are so disconnected from the general market. I just honestly don't even want to. ETFs were an indicator of the general market right now. I don't think they really are, but I'm just reviewing them for the heck of it. So resistance 223, 228, 231, 228, 231 should be the near term goals, and then your longer term goals should be 257. All right, so let's take a look at Apple and see what's going on with Apple. Oh. All right, so Apple is gonna, it basically came out of this descending wedge, and again, when I say complete technical play out here, these lines have been there forever in all my videos. Look, bounce off of the 50% extension, bounce off of the 50% extension, and then the 61.8 extension is going to be your resistance. So we're probably going to hustle around within this channel of, or square, we'll say most likely, of the 61.8 and 50. As soon as we clear out of the 121.6, which is also where your moving averages are here, the 9 and the 20, it's gonna go and go above and test the 130. That's where my goal is for Apple. But you can say that Apple is not moving up or down. It pretty much is either, I can't tell if the institutions are liquidating their Apple positions to average down on the small caps. That's what the issue with Apple is, because the institutions own a whole lot of heck of Apple, and it's like free money. Apple is, they're not probably selling for loss. I'm guessing they had like their averages are way down below, so they're just liquidating Microsoft and Apple and Amazon. Amazon is more looking bearish than Apple and Microsoft, but they're just liquidating their positions to average down on the small caps. That's what they have to do. So that's why Apple isn't moving up or down. It's just like they won't let Apple move down, so that they could sell more for the other positions, but they won't. It won't go up either because they're selling it. That's the issue with Apple. But overall, my target for Apple is 167 by late summer. Next ticker is Alex. So I believe I have not reviewed this stock, Alexander and Baldwin. So I don't know if again I don't know all the stocks, and it looks like it could be a Dow stock overall. I don't know. But eventually the chart doesn't look bad. It got a support at the cloud top. It got a support at the cloud top. The moving averages are over the price, so which is not a good thing. Your resistance are going to be this cloud line right here, which it has been today, 1706. However, I don't believe the chart looks bearish. I can do a small extension here, and I'm going to draw a larger extension. So rather you do a small extension or a larger extension, they end up being at the same place. So your resistance is going to be like 1930s. Your goal should be 1844, 1876 area. Long-term target, if you're longing this, 23. But again, I don't know what the business does. I don't know what they're doing. Obviously, there's a big resistance at 1930 levels. So 1925, 1930, that should be a big resistance. In the shorter term, though, I think the greater resistance is going to be 1812. Would it have a downside? I think it has a strong base around 19. I'm sorry, not 19, $16. And then it's getting a support at 100-day moving average. I don't think it's going to have a more downside, but it should reverse from $16.61 to $16. This range is going to be a great support. Yeah, the chart doesn't look bad. So next up is AMD. I told you that one scary thing was the rounding top, and I said that it had to bounce in my latest recording 74. If it breaks 74, then you're gonna hit 67 and below. So it did what it's supposed to do. It did do a great job not going down and even testing 74. Your resistance is looking like it's $79 and $81 were basically where the bottom of the cloud is. I can't really tell you too much on the upside because of two reasons. It's not looking bullish yet. Now, one indicator of a bullish scenario that you could say, how come you're not seeing it? I am seeing it. It's just too early to call, but I'll go ahead and zoom in because it's still on a downtrend, and it basically did not work out anyways, but I'll show you what I'm looking at. So this is what you want to call inverse head and shoulder, but it broke, so it's invalidated. If it continued and it broke this wedge, then it would have been great and it would have tested these levels right here. But it didn't play out, so it retested the bottom of this. Yeah, but it didn't get that far, but I think what it's going to do is like retest this wedge. If it breaks out of the wedge, then this is going to be a strong level, and this is going to be a strong level. So let's take a look at what they are. So imagining that it's going to try to break above the wedge, it's going to be $79, $79.20 around there. And then you're going to have $81 and then $86. Those are going to be your range of reversal. And if you want me to do an extension, I could surely do one, and it's probably going to show you the same levels. Yeah, you see where the cloud bottom, the two lines right here, 1 and 2, that's your cloud bottom. And then the resistance I said would be the cloud top, and it's fairly close to it. So I said $86, it's 85, 86. So give or take, sometimes I don't have to do extensions. Just knowing, having an experience with the Ichimoku cloud, you could automatically guess where things are going to align up to. Okay. And then eventually the most bullish scenario, the 161.8 extension, is heading towards the $92 range. Okay. But I would be more bullish if it breaks out this downtrend. So for now, all I could say is I'm neutral and hoping that this double bottom, the higher low here, plays out and breaks out. Again, you have lots of resistance here, 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 and here. Okay. Next was Blink, so we'll take a look at Blink. Blink actually came out of that. You see what I just showed you on AMD? we had the descending wedge. So Blink basically broke out of it but couldn't get in the cloud twice. So one and the second effort. So if you pay attention to the cloud, you see how accurate the cloud is. You see to the cent right there, it hit the cloud and came back, and then now the resistance is the 20 and the 9-day and the 100. So it closed right under the 100. However, I didn't think the earnings weren't that bad. I don't think the chart. I think the chart is on a play. It's playing a rounding bottom. So let me do this for you. To make this a little better, why don't we do, because I don't have that semicircle drawing capability in here. So what I'm basically going to do is bring this here, and let's do Blink. Holy moly, I have so much drawing in here. It's so busy. I'm going to try to delete all of this stuff. So I don't know this pitchfork where it's coming from, but it's pretty darn close. So for 39.31, 38 to 39, that range is going to be your resistance because of the moving day averages, and then you're looking at 44. But I just wanted to show you a formation that I thought was, and I kept saying right around here when the price was around here and it was above the 21 EMA. I've told you guys two things. I said I do not like the rounding top, and it might play a bear scenario. Okay. And if you look at this bottom trend, it's holding that bottom trend. Okay. Where it could go to could be possibly even around this line of the cloud, maybe 44. That's where I'm guessing. If it breaks and it continues above this channel, the 46, you're going to say, well, of course, if it goes to 46, that's like 33 to 46 is huge. It's like, you know, 15 bucks would be, what, like 18 bucks would be almost 50% move. But I like to look at the stock long term. And if you want the indicators of this rounding top, let's make it even more, you know, definite. So you'd have to break out of this rounding top. Yeah, the downtrend, this channel that I drew is playing out as it's saving the stock, no doubt about it. But I would be bullish only if it, you know, slowly though, slowly. So what it could do is let's what I think it was the ghost feed. What it could do, and I'm looking at, you know, slow moves. So possible moves like this is going to be bullish. And then if it just continues above this red line, then I would be bullish, because then it basically would break out of it. But if you want to draw another formation here, the stock is also maintaining this the rounding bottom here. It's maintaining these levels. And you see that the candle actually is bouncing off of it. So you wanna have such a move like this, you know, bouncing up, down, up, down, up, down, and then eventually carrying the price over the 39 level, and this cloud line is going to be your resistance. Any quick spike up like this, you'd have to sell. But if it moves slowly, and then till, you know, where May is, I think where market is going to clearly turn to the upside with the small cap stocks after May, like the first 2 weeks of May. I think my guess is that the first 2 weeks of May is where the stock will try to maintain the price above 45 and then move up. Okay. So that's how I see this stock. That's when I look at the chart, these are the things that I see. And I hope that I was successful showing you the visual charts in my head, what I see when I look at things. And it doesn't mean that I might be correct. Half the time I'm right, half the time I'm wrong, which is most the same people, is you're always correct 50% of the time. So without spending any further time, we're going to go ahead and look at PNGO, which I said it was a good stock, and I've trusted the technology, but again, it just gotten beaten down. And these are the levels where when they have announced, and it dropped tremendously right here, was when they announced the secondary. So we're at these levels. I drawn this chart obviously, but this line that I've drawn, and I said it would become a resistance, is acting as a resistance. If you want to see any bullish sign for this chart, I would say that it needs to break above the, and basically breaks above the bottom of the cloud and maintain its position. If it does that, I could consider this as a double bottom, and then I can go ahead and draw an extension looking something like this. So then your targets would be basically right around 911 and 962. But I don't know, and I'm ballparking because you know, I didn't like do it to the cent. Maybe I'm off a couple cents here and there, but nearly $9 and 960, 909, 960 range should be where the possible upside move is. But your greatest resistance is the bottom of the cloud, which is 810. Okay. I cannot guess, or when I say I guess, I'm guessing on the patterns and the knowledge that I have for previous knowledge that I have, but I cannot speak on behalf of the company news. So if, you know, you get great news and, you know, more institutions buying into it, then it could trigger the price up. Without even drawing this, I can go ahead and draw another. So this is going to be also where your resistance is going to be. Okay. Well, okay. That's where your next resistance. So 809 and 960s, 967s are going to be the two resistant point for this stock. Next up, CCIV. So Churchill Capital, well, it only depends on one single news, right? So with EV sector being down, getting beaten down, it really didn't help this. And when I said bells are ringing, and when I gave this, you know, little yellow box, and I said, you know, either this yellow box or this extension should be the top, and it just blew out, and people would have thought that I was a fool, but bam. And I kept saying it, when you have a stock that's, you know, $9, which is obviously it's not really a stock, it's just a SPAC, $9 to 65 almost as a SPAC should have given you some warning bells. What I see here is clearly a 50-day moving average resistance, which is $30. Now I can't say, so you have two scenarios here. Either it's going to go ahead and test the 100-day moving average, which is 1988, or you have two resistance, 2607 and 2957 at the current moving average prices. So these are, of course, moving averages, so they move, obviously, right? And they might change, but this is going to be your range right here. Okay, either you're gonna get a, you know, support at 1987. I said 1977, but around there, right? And then these are going to be your two resistance levels. So I'll zoom in and have you guys check it out. But again, these are specs. Specs are out of you know, their popularity right now. And what I could say and what I could guess is that it all depends on the EV sector currently, and of course it all depends on the merging news, right? Valuation of Lucid. So we'll see what happens. I just don't think it has too much upside or too much downside, given the fact that, you know, you got your moving averages and it looks like a pretty good band right here. So Fubo is next up, and it had a very interesting day today, and it's very clear where it lost all of it is basically you see these 2 points and third as soon as it broke. And today, and I drew this line before, and I probably posted it on my next video too. Yesterday's high was right at here. and it's not a coincidence. And then bam, a huge candle. I mean, we seen these candles before, and then it like triggered, but I don't know if the stock deserves such a beating. All I could say technically is you have two scenarios. Either it's going to go to 1837. By the way, I have the stock, so 1837, or it's going to try to reclaim this and stay above 2747 and build a little momentum, and then go towards the 33 range. Why it was such a sell-off? I think that people were highly leveraged in Fubo with margin, and a lot of it was probably margin loss selling, triggered by the of course your um, institutions, and they're trying to bring it that what I think is that the institution, this is a highly institutionally owned stock. I don't think they give a damn how far it drops. I think they're collecting it. It's just that they are trying to accumulate it. And you're going to say, where is the accumulation? There's a huge sell-off. But honestly, most of the sell-off, when it was 10% down, it was only at like 8-9 million shares of volume. Um, and most of the selling were triggered after the 10%, where your broker basically just continued all the sold most of the margin call positions, and then I'm just guessing most likely all the stop losses. Because I've never seen, there's no news, there's nothing that the company did to go this far down today. At one point it was more than 19% down. I'm looking at the after hours. Now it's over 2230. So where is 2230? Right around where I think the candle is right around here. So a little bit above right here where I'm pointing at. It's just badly beaten down. And I think your goal should be $27 and above. That's where I think it's going to go to and try to get in this wedge. Um, I don't see any bad news. I don't see any reason for the sell-off other than what I think is technically a margin call losses and stop losses. Since the company had its earnings, it had not had any bad news at all. It's just the small caps selling, high growth names selling, and Fubo at this position to me looks like a good buy. When I say goodbye, like a buy, what I meant to say was a buying area. 1837 could, I don't know, it could be possibly on the 100% extension. Play, could it? Yeah. If the sell continues and the margins start triggering again. But this stock, remember, had gone from 62 to $23, and then from $23 it went all nuts. So again, you're seeing this 52 to 21. Anything can happen. It's just that for me, more likely the institutions are dancing around the stock. I don't know what their goal is. I don't know if they're trying to allocate more position by triggering stop losses, because when you get triggered on a stop loss or when you get triggered on a margin call, the bids are low and they know they're forcing you to, sell the margin call. You have to sell whatever the current price is, and that's what they're doing. A great example is GME. GameStop went all the way to 43, from 400 to 43, and then all of a sudden 43, 45 around there was dancing, and all of a sudden it shot up to $300. Of course, there's a different story there, but I was just saying the down, how stocks go down is when you're forced to sell and the bids are so low, it just drops tremendously. Next stock, HUML, but apparently the stock's previous ticker was TNSP. So Tesoro, I don't know which ticker to click on, but let's take a look. Yeah, at least now we get a chart. That's what I wanted. I actually wanted the chart. So I'm guessing, I don't know what the stock does. I can quickly look up what they do. So HUMBL. It's a fashion floor covering and tile. Um, it's a US company. So let's take a look. Let's analyze it. The chart again looks like it's reversing, but then the cloud bottom is going to be a resistance. I like the bottoming, like it's a rounding bottom, but then the resistance is going to be your cloud. I would say that since this stock could be volatile, and I see the moves right here, what I would do is take a stop loss around 325. That's what I would do, the 50-day moving average, if it breaks down. Of course, the chart does look bullish, but in this, in this scenario, in this time, the issue is that all of these names have gotten beaten down so bad that people are almost afraid of going into these types of stocks. What I'm going to do is take a picture and I'll show you what I'm seeing. So you see this rounding bottom, which is a good sign, but the resistance is going to be right here. If you can break out of it, then you might get a sell right around here, which coincides with the cloud top. So let's take a look at what those levels are. Your resistance is 402, and then right around here, I'd say from 474 to 492 is going to be your next resistance lines. I can go ahead and do an extension, and it might just be where I was probably telling you. I have to play around with this extension a little to just see where things can go. Your long-term goal should be 592 to 673. Of course, I'm speaking technically. There could be a fundamentals in this company that I have no clue about. I don't know the income, the earnings, the revenue, the expenses of this company. So that's all the question there. Technically, what I draw this right here should be the top. So 673 is this previous top, and then it took a dive. But right now I wouldn't worry about this far up right here. It should go over 402, and then I would sell it around 477 and wait to see if it takes a second dip and then go for the longer term. Well, what I've just noticed is that actually I was reviewing the wrong ticker. This is the TSNP, which was an energy sector. Hummel is the new. So I messed up on that. So I'm gonna have to go ahead and fix the timestamps. But the energy sector and what's going on with it, obviously, it's gonna go up a little. But I don't know. This chart. I am looking at this chart, and all I could tell you is that I can't read it. I could tell you that here's the resistance at 284, this right here. The second resistance is 410, but it's really not a technical chart on the daily chart. Maybe let's take a look at the hourly. Again, it's hard to judge. I'd say that your support level is going to be around 248. And your resistance is at 283. Besides that, it's really not these types of charts are not my thing. I might be wrong. Of course, it's waiting for a momentum to break out, and you might see a breakout like this. I don't know if this was news related right here. You might break out and go towards $4, but I would be guessing if I said anything. I just don't like to do charting in these types of charts. Like I don't have much history because of the symbol change. When I do TSNP, the issue is that it's not there anymore. So I can't really see the past history of the chart, and unfortunately I can't really be too confident about the technicality of this chart. Next up, which again another request, OCGN, Ocugen. Yeah, the MACD still has its time, stochastics still has time, RSI still not bouncing. There is this huge gap. However, the 50-day moving average is holding strong. Your next resistance level is going to be 832, 888, and 954. So those are the levels. I'll repeat again. 842, 839, and 949. So those are the levels, but the issue is this. If you lose the 50-day moving average, let me just zoom in a little. If you lose this pink line, which again, the stock did close down below it, you're going to have a gap fill right around here. Okay. So that is basically nearly $6. So watch out for that. I don't know what the company does. Again, even if I knew, I'm not in the medical sector, right? So I believe that Ocugen is probably in the medical sector, just judging by its name, but don't judge a book by its cover type of thing. I don't know. So I'm looking at around like $6 if you continue on losing this 50-day moving average. If you go above it, again, 837, 893, and 949 is going to be your next level of resistance. Next up is Palantir, where I have about 90% of where my money is. I'm not really I don't have diversified portfolio, I could say, and I never had. I can suggest to have a diversified portfolio, but for me, I never had. Remember what I said the other day? I said my last recording, we have to close above 2263. Well, we tried, and when I said that, we were right here. So you can watch the last video and you can see how perfect this channel was. Basically, we got stuff there and then kind of got resistance at 2263. A pretty good comeback. Knowing that an institution like RK is behind you and they're pumping money, honestly, I'm pretty surprised. Like, she bought 1.2 million and then like 700,000 some other shares. I don't know what she bought today. I don't know if they published it yet, but I do think that the lows are in. Pretty much I could eye right here. So let me go ahead and draw. You see this top candle and the bottom of this candle. I think pretty much in the near future this is going to be your bottom. $21. Give or take couples. You could take a couple cents off or on. The next level, worst case scenario, is going to be right here, which is the bottom of this wedge, is 1880s. Now, do I want the stock to go that down? No, because I have such a huge position. Would I be upset if it does? No, because then I'm actually accumulating money to buy it from there. So I'm kind of stuck in between. I'm like, if it goes up, I'm happy. If it goes down, I'm sad, but I'm happy. It's like I'm in a mixed feeling right now. I don't think the stock is going to get that much punished when ARK is obsessed with it. When ARK is accumulating, they're not accumulating for the next 2 months or 3 months or the next year. They're usually positioning in for the next 4 years, which we saw for Tesla. Now, how far can it go up next 2 weeks? We have lots of resistance. All the moving day averages look bearish. I mean, I don't see this going up too much in the near future. Can we have a turn like this? Yeah, but I don't want it to go that fast. I would say your next level of resistance is 2373, 2433, and then eventually 2535. If we, by next week, if we close above 24, let's say $25, I'll be happy. Now you're gonna say, of course you'll be happy. 22.58 to $25 is a pretty good amount, but look where it's coming from. It's coming from there anyways. I just want to get over that 100-day moving average. everything was looking great when we broke above the 9, and then we were just traveling, and bam, we hit that 50% wall right there, the extension, and then just came down pretty heavy. So again, when I chart this stock, I don't really want to like look at, near-term futures, but what I do want to look at is the long term. And for long term, I have my target at 56.59. Now, according to the Pitchfork theory, that price would be around late June, early July. It's hard to believe the stock would go up 100% plus. It's like 110%, I don't know. But it doesn't have to on June. I could wait for a couple of years because I'm pretty much positioned and heavy on Palantir. This is not an advice for you to position in heavy in Palantir. It's just my personal, so it's my personal play right here. So, and by the way, anything I say in this channel is just, educational purposes, and I'm just, going out and giving technical analysis. And it by no means that if I buy something or sell something, you should do the same. So let's go ahead and look at our next stock, which is Riot. Okay, so it's a blockchain thing. It's Bitcoin, but I do like the chart, honestly. Um, the cloud top resistance is going to be what you're going to watch, but I like this bottom reversal of the stochastics. The RSI isn't that damaged either. MACD might still need some time, so you might get, bounces off the cloud bottom or the 50-day and so on until it breaks for the next level. Clear extension that we could draw would be right here. So you can take a look at these levels. I can draw a bigger extension. I think this could work out. And this is purely a Bitcoin play, honestly. Like I mean, the chart doesn't have to look. The chart doesn't have to have. The chart can look bad, but because the Bitcoin goes up, it could have a surprising move. I mean, imagine this, right? Going 29 to 16 bucks and then just picking up. So you might have something like that. You might have something like that. And this should be your goal for this stock. Right here, $93 to $97. Long term, of course. It doesn't look bad at all. I like the chart. I've never bought this name. Not, I mean, doesn't mean that you don't have to, but yeah, there's no way that that can happen. I don't know. Like Bitcoin seems like it's gonna have a strong move within a month or so. I mean, the time range doesn't make sense to me that it looks so bullish, but I would think that this is showing me that Bitcoin is gonna have a strong move. Now, I'm not charting Bitcoin yet, but I believe that even by end of April, you can reach to 92, which seems ridiculous to me, but I do want to believe in it. And believe me, this can just move nuts. Like, I'm kind of surprised about this chart. I'm bullish on this. I could say it could hit 93 within a month or so. Call me crazy, call me nuts, but I'm just doing it technicality wise. The bottom of this pitchfork, and it could just go like this, and then just bam, outburst. And I don't see too much sell volume, whereas buying volume is ridiculous. So yeah, let's wait and see. I'm gonna eye this one and see how far it goes, but we'll see. Next up is Snow. Wow, I haven't seen this chart for some time and it's been beaten down. Of course, a lot of critiques were on this stock as, being having too much valuation for the current price and blah blah blah. And people might have been right. I don't know. I don't really check the valuations and sales. I look for the growth story. Um, Nice support off of the 9-day, broke above the 20. I think it's heading towards this line of the cloud, which is $258. So let's go ahead and mark that area, and that should be your target. This should be your target. Now, currently where the closest resistance is going to be right here. So you're pretty much close to the first resistance. And goddamn, this stock was beaten down. Holy crap. MACD is so low. I think this is a great buy. Talking about buying the dip, what the? I'm holding myself to say, but this MACD, it could just curled up, and you know, it doesn't have to like go directly above zero. It could just, you know, curl and slowly move. But holy crap, like this is just beaten down. But I mean, you look at Palantir too, right? It's like, you know, it was $45. Now it's like 22. So this is, you know, 429. Now it's 200. So you're having a huge discount. But the valuation side, I'm not going to be the judge for it. Very much beaten down stock at this point. Of course, my targets are changing now. Eventually, your play should be 300 to 328, but there's going to have a lot of time for that currently. And then, you know, your resistance at 237 and then the 259 levels are going to be should be your first target. But the indicators are telling me that it's on a reversal, but it could hit a wall and come back down. Next and the last requested stocks. And remember, these are all requested stocks. I don't just randomly pick them, and I'll post you know, request tweet every Friday. Wow, this is really beaten down. Well, it's not a stock actually. It's an ETF. ETF Trust Small Cap Bearish. Now, I can't really chart these guys. These are ETFs that are meant to just decay. Honestly, there's no reason for me to chart this. But I mean, what if you want me to? It's like charting, you know, UVXY. There's no reason to purchase, and these are not. This is not something you buy and hold. Obviously, it's just, it decays over time. But what I could do is maybe do a chart for on the hourly and tell you if where the stocks, like, this is the counter, like it would be like VIX almost, where it could go. So it broke down on the hourly. It looked like a nice cup, and could it form a handle? We have to watch for that. So what you want to watch is this. Let me take a picture. And again, I'm not doing any technicals. I'm just telling you what you should watch. So here is a nice megaphone, right? So when you break down, you're going to go down. Here's a nice megaphone as well. If you break down, you're going to go down. That's one thing you need to watch. Okay. Let's go ahead and do other things. Now, if you're on the bullish side, what you should look for. Of course, this is a bear signal for the market, but what you should look for is this. Okay. Or simply, it could just break out. Okay. Not in favor of charting these things. They're just indicators. If you listen to my VIX section of analysis, that should better give you where the market is heading up to. But I wouldn't really trade these unless they're like weekly or even daily, just buy and sell. But this is not something you buy and hold. Obviously, it's meant to decay over time. So that's my analysis. I mean, you'd have this is on the hourly. It broke down. You could see these levels again, 30. or you can squeeze out of this and go for the $40 range. So then you're in the middle. So you have a $10 range to the downside, $10 range to the upside. It's really your gamble at that point. But I do see a nice support in this range. So 34 should come to a nice support. If it doesn't, I'd get out because it's definitely going to 30. So that is my analysis for TZA, basically a small cap triple, leveraged bearish ETF. Other than that, what I would like to warn people is that markets are looking for global news. Any global attention is going to bring us down. Germany closing down. What else is there? Look for any other closings, like you look for any other global news like the Suez Canal and everything, and how it could affect you, how it could affect your stock performance or your portfolio. So that's all I like to say, and that's about it. Have a nice weekend, enjoy your family time, and we'll see you all next Friday.